All right, our next
Thanks, Mike.
speaker is Doug Jarl. He has execution responsibility for the aerospace, defense, and government services vertical, having joined Barclays in August 2018. Prior to joining them, Doug spent 5 years in investment banking at Bank of America. Doug has broad industry transaction experience spanning sell side and buy side M&A, equity capital markets, leveraged finance, and investment grade debt capital markets. Maybe you'll be able to answer some of Laura's questions from earlier today. Prior to investment banking, Doug served in the United States Navy as a nuclear submarine officer stationed aboard the USS Toledo, SSN 769. I was born in Toledo. Doug graduated from the United States Naval Academy with a Bachelor of Science in Systems Engineering in 2007 and received an MBA degree from Duke University's Fuqua School of Business in 2013. When I introduced Ron the first time, I went to North Carolina, so, I have a little bit of trouble just putting that passion behind the Duke introduction. So my apologies there, but we got Toledo and we have the U.S. Naval Academy. I lived across the street from that for a little while as a child. So take it away, and the screen is yours.
Thanks, Lee. No, that's great. Yeah, two out of three works. So I
Yeah,
think
yeah.
we're all good there. Um, yeah, no, thank you again for that introduction. Look, I appreciate I'm honored to be here and to speak today. So I don't have any slides to present, but I know I got about say 15 or 20 minutes. Haven't rehearsed how long this will go, but so if I ramble on, just cut me off and we can go from there. But yeah, no, as you mentioned, the focus of this is, how do you look at space offerings, space investments from an investment banking perspective? So that's kind of how I'm going to form the little presentation here. I'm just going to hit on kind of 5 mini topics, if that works. Go through those, and then however you want to run it after that, or Q&A, we'll go with that. But yeah, so from my perspective, right, as I cover aerospace and defense, space is a natural extension of that. Falls today both in the commercial and the defense world. And so, to me, it's a very exciting part of A&D. It's a new extension with all these new technologies, which is really fascinating and exciting today. So when we look at it, when an investment banker looks at it, when I look at the space, we look at it first from how we can help, and meaning what products we offer, how can that work? So number one would be M&A advisory. So we'll look at it from that angle. The second one would be equity capital markets. So it would be either from an IPO or a de-SPAC, or from a private capital raise perspective. And then the third one would be from a debt lens. And so as space is today, the age of the sector, debt is probably less so. And if I were to rank, I think we can all agree that de-SPAC, although it may not be the best word today, de-SPACs have been very popular, obviously, over the past year, as well as private capital. And private capital, I think, tends to be still the number one means of growing space investments today. M&A, as I'll go into in a little bit, is I think it's tougher from my perspective, from a Barclays perspective, from a bulge bracket perspective, just given the stage of where these companies are, where they're pre-revenue sometimes, they don't have a lot of EBITDA. So it makes it a little tougher to do M&A today, even though it is getting done, as we've seen from some of these new space companies. So that's how we look at it. So the second thing would be coverage of the space, just given coverage from a knowledge and a technology perspective. And what's interesting, what's two parts: what makes it difficult to cover, as well as what makes it exciting, is all the new technology. All the new technology from all these startup companies, as well as mature companies, And the number one thing is trying to get your head around that, trying to understand what the business model is, trying to deduce whether, you know, this has legs, whether there's strategic partnerships, will it be successful both in the commercial and defense, or one or the other. So from that perspective, thankfully having an engineering background and being on a sub makes it a little easier to understand. Although part of the thing going to the conferences, sorry, is helpful in the fact that you get to talk to the actual engineers of some of these companies, really learn what they are producing. So that's helpful. I think the second part is financials, right? So as I've been hitting on, these companies are much smaller, and they're private, obviously. So it's hard to discern the actual size of some of the companies, and really, you know, kind of sift out which ones are going to succeed, which ones aren't going to succeed. And obviously there's no magic formula to that. So that's another part. And then the last part I'd hit on kind of goes with that is, for PE clients, they tend to be, some of them tend to be interested in space. I mean, most all of them have an interest in space, but I think it gets difficult from the mandates from the funds that they've raised, because obviously they're looking for at least a little bit of EBITDA. So again, that's kind of where the challenge is from my perspective, trying to generate business on my end, is that there aren't a ton of targets with the correct or the right parameters to do M&A deals, as I mentioned before. The third topic, though, is kind of pockets of opportunity. So kind of covering the sector to now where we feel there are pockets of opportunity, in our opinion. And so staying on the PE trend is platform plays, right? So we've seen successful platform plays from the likes of AE Industrial Partners, where they took Redwire before it was Redwire, and they started piecing together some of these smaller space companies that had, you know, call it single-digit EBITDA. Created a platform. They created it at such a time where the de-SPAC market was still pretty attractive, and so they de-SPAC, become Redwire, and they've become a very good name in the, you know, new space environment. So that one, ATL Partners acquiring Geost is another one where they're looking to make a platform play. And then you have InnoFlight that was acquired by Jordan. That one's interesting. A little tangential to when my partner and I advised on Seeker in the fall. It's kind of a competitor to Seeker. And then the last one, Arlington Capital, maybe stretch is a little strong word, but creating Blue Halo, which is more of a defense as well as a space company, which is a very unique up and coming company. And Arlington Capital Partners is doing a very good job at building that out. So that's platform plays. The second one would be, as we've mentioned, de-SPACs, IPOs. Again, you know, caveat at the moment, the market is what it is. It's not super attractive for anything right now. But for de-SPACs in particular, it's a little challenging. You know, last year seemed to have been the year, 10 plus de-SPACs for space companies, and then mixed receptivity as they've closed and become actual public companies today. You know, we can help from that perspective, as well as the pipes that are involved with de-SPACs. And that's a helpful way to see how investors are looking at space companies. So we help with that as well. I think the trend has been, though, as we've gone over 2020 and 21 really, is that across all the new technologies between drones, eVTOLs, and space in particular, investors have become smarter and they've become a little more risk adverse, and they really want to be sure what they're buying into, especially if it's a pre-revenue company. So we have to be extra diligent when we're advising companies to really kind of dig in, see, do they have good pipeline opportunities? It tends to be a lot of defense funding to start, even if they have a commercial strategy in the long term. So a lot of the funding for these companies comes from the defense, and then they transition over time through their projections, as you can see the kind of the hockey stick projections for some of the companies. And what's still popular is the last thing is private capital, right? So there's a lot of private capital raises, that are still going on and sizable today. A couple $100 million here and there, and then an astonishing one by Sierra Space, $1 billion raise, which is phenomenal. So that is, today, if you're a company evaluating your capital needs, it makes the most sense to try and raise privately, continue your growth privately, and then potentially find a monetization event, whether it's a de-SPAC or an IPO, after we get kind of out of this choppy market. So that's kind of the third mini topic. Well, I guess I should hit on the debt markets, right? So, which is not a big topic, but it's, as you've seen with some of these new space companies that have de-SPAC'd, apart from just equity raises, which are probably the most common option, and at the top of the list, you can think of the convertible debt market, which is another alternative to just raising equity. And so that we've had some recent conversations with some top de-SPAC names on this, and it comes after kind of lockups are over and so forth. And so that's one. The question also comes from time to time, are there any other options? And again, it goes back to EBITDA, cash flow generation. It's very tough, even at least from an institutional perspective, from a bulge bracket perspective, to do any leverage finance on these names today, just given there's tends to be very little EBITDA and cash flow generation, although that's not to say there aren't other sources out there, right? There are other sources that kind of float in between, equity raise on the venture side, as well as what institutional banks can help with. So I'm sure there's another market there, which I'm not the expert on, so I won't go in depth there. And then kind of the last thing I wanted to hit on is my last mini topic is, I guess we'll call it current events. It's more of investor sentiment, as well as kind of, I think the one that's topical is the recent report that came out, State of Competition in the defense industrial base, which I think is important to note here for space. But just first off, for investor sentiment, as you look at some of the de-SPAC names, these are, typically the investor sentiment topic typically applies to the public names, or as companies decide to go public. I mean, we've seen from some of the new space names that have had either Russian ownership or other foreign ownership, which obviously from a national security perspective may not be the most attractive. So, but I think on the positive side, those situations have been resolved, and these companies look to grow from where they are after they solve the issue, which is a fantastic thing for the entire space industry, in my opinion. We've seen one recently where, and I think this goes with all de-SPACs, right? And this would be kind of overstating projections or making potential misstatements in your growth or your timeline. And unfortunately, there can be some lawsuits that come of that. And I think that's just kind of the unfortunate nature of the beast when you are allowed to put projections in your statements for instance, a de-SPAC, which is another topic we can go into at a different point at appropriate time. But so those are kind of, I guess maybe more negative, but there are some positive things that come out of there. And then the positive thing to hit on my current event section here is this recent, well, it kind of was stemming from the Lockheed Aerojet termination, this report actually from, I believe it's Office of the President and not the DoD, which makes it sort of interesting, but also positive at the same time, is what they're calling a state of competition in the defense industrial base. And so I think one of the points they're hitting on, apart from the obvious scrutiny amongst mergers and consolidation in the industry, is promoting the small businesses, which to me, that reads everything in space, right? Venture companies, small companies looking to grow, to increase competition. I think to me, that's what new space is all about. It's about creating these companies that are kind of changing the way that traditional primes or larger conglomerates have faced this. And we've seen it with, the DoD has partaken in this with, SDA and so forth, kind of having a mission statement of not looking for the 100% solution, but finding the 80% solution that can get to market faster. And I think the phrase sometimes is fail fast and then kind of correct yourself, course correct, and you come to a solution that's not 10 years down the road, but is effective today, because we can probably all agree that national security today is of utmost importance, I believe. And so again, the last thing I'll say for that defense industrial base is that they hit on 5 key sectors that they're really focused on. They don't specifically call out space, but they call out things such as hypersonics, which is, essentially space, right? There's a lot to do with how you create missile defense systems, how you create hypersonics, and so forth, that has to do with space. And so, again, I think that is a very positive thing for the industry in general. So those are kind of my 5 mini topics. I'm happy to take any questions.
Yeah, thanks, Doug. So one question is, how is investment bank investing? How does that differ from VCs? So, I mean, for most of the space sector, most of those investments are in the form of a venture raise. And so, maybe the handing over of the check is the same, but what is it that's different on everything else?
Yeah, so from my perspective, and I tend to be candid sometimes, is that we don't have skin in the game. And I think that's sometimes unfortunate, that I feel it's unfortunate. But so if you think about it, the difference for us is that we are transactional based, right? So when I listed off the products such as M&A, equity capital markets, and debt, we help execute those transactions, right? And so for M&A, we receive a fee on whether we're on the buy side or the sell side. So we are with our client from the start to the finish. But at the end of the day, how we get paid is we get paid an advisory fee. So like I said, unfortunately, because I like space, we don't actually put dollars to work in an M&A transaction. Equity capital markets is very similar, right? So we are the conduits, wherever we sit on the deal, we are the conduits. If you're the pipe placement agent, if you're a SPAC advisor, or if you're the target advisor, it's unique in nature because both sides come together, both advisory sides come together because they all become one team because they want it to be successful. But we are going out to the investors, whether it be additional VC money, but you tend to see when it becomes a D-SPAC, you see a lot of institutional, right? You'll see a lot of BlackRocks, you'll see Fidelity, T. Rose, that are putting a lot of that institutional money. And again, at the end of the day, we get a fee for our service. And the same thing goes with debt. We'll take some, this is the one thing where it differs, and it's more in leverage finance and really in leverage finances, we'll syndicate out. So we'll have a smaller hold and we'll syndicate out the rest of the loan. So it depends on how much we want to hold on our balance sheet. But that's I guess to answer your question in a long way is that's when we'll put our dollars to work, is on the debt side.
Okay. So otherwise you're more or less brokering the deal, and being that trusted agent between the parties.
Correct.
Okay.
Yeah.
So when you're, as that intermediary, and what are you seeing as some of the major hurdles for more and or larger investments from those bigger PE firms?
For PE firms specifically, it's really having that EBITDA and that cash flow to make the returns work. Because you'll see, I don't know if you call it like maybe traditional firms. I would say probably traditional funds. They have a mandate, right? And it's, you have to fit it within this box, right? And it's usually an IRR of 20% plus or minus. You have a return of so forth, and then you have a hold period of 3 to 5 years, right? The standard PE investment. What you've seen some of the traditional PE firms, which I mentioned earlier, is that, and I think this goes across any sector, is they're creating alternative funds. They're raising other funds and other capital for funds that are created for either middle market opportunities or maybe we'll call it frontier opportunities, which is, electric vehicles, space, what have you, on a technology front. And that will have the mandate to perhaps put an equity investment in a kind of a VC startup company. And you'll see with AE Industrial Partners how they partnered, or they bought, don't quote me, part of Boeing Next, I believe. And so that's kind of the VC arm out of Boeing. And so, right, that was just a big public signal that they were doing this already, but they kind of just made it public, even more public, that they would have that in their toolkit, as well as putting investment dollars in smaller space companies.
Okay, that makes sense. Yeah. No, it's fascinating to hear sort of the calculus on all these different sides, even just of the equity raising and what goes into that. And so that was really informative. So thanks for taking the time to chat with us today, Doug.
Yeah, no problem. Happy to do it. Thanks again for the invite. I really appreciate that.
Yeah, gladly.